Today I'll be showing you how you can use a pullback strategy, or let me say dip, in the forex market. Yeah, people do say the trend is your friend. The question is, when is the right time to join the trend? So today I'll be showing you how you can use the exponential moving average, that is EMA, to enter the trade using a pullback strategy. But before we dive into it, don't forget to subscribe to my YouTube channel and also like my videos. And you can also turn on the notification bell so that you can always see my video when I post them. Right now, let's dive into it. Okay, now we are going straight into using the pullback strategy. Now, if you are looking at my screen right now, we'll be using, let me delete this, we'll be using exponential moving average EMA. We'll be using EMA 40. It will be 40 exponential moving average. Then we click, let me make it multiple. Perfect. So now let me explain the meaning of pullback so you would definitely understand where I'm coming from and where we are going to. So pullback are just a correction that exists in an existing trend. So let's assume there is a trend. Let me show you an example of a trend. So I'm coming. Okay, good. So this is an example of a trend right here. This is an example of a trend right here. You can see this area, the example of a trend. So the correction, this area is a correction. This area, you can also call it a correction. Let's say this area too, they are also called, you can call this area to a correction. So they are just a correction that exists in an existing trend. Let me show you another example of a pullback so you can understand what you're talking about. Okay, this is a trend, this is a correction, this is a correction, these are corrections here. So you can see an example there. So you may be thinking now, like, how will I know when a pullback ends? Like, well, how am I going to be sure, like, wow, this is the right time to enter the forex market, or this is the right time to trade? You understand? So that's why I'm here for you today. I want to show you a secret. This is a very powerful secret. If you can use it in a very good way, you can use this to make your strategy or make your trading look more profitable. Yeah, so today I'll be showing you how you'll be using EMA 40, just EMA 40. Though to spice things or to make it more juicy, you can try to add support and resistance. But today, let me explain to you how you'll be using the EMA, the exponential moving average. Then you can add support and resistance to it if you feel like doing that. Now, anytime, let's do for settle example, because I can see an example here. So anytime a candle closes below the exponential moving average of 40, wait for markets to go back and touch the exponential moving average. If the candlestick does not break this exponential moving average and comes back down, then you'll be waiting for this exact sample to happen again, to occur again. Let me explain. What we'll be looking for in this type of strategy is we'll be waiting for price to touch this exponential moving average, then we enter for sell. Price touch this exponential moving average, then we enter for sell. It touches it here too. Yeah, this is an example. So instead of just going in and instead of entering your sell immediately, you hold on. So let's assume it happened. Look at the right hand side of my screen. Let's assume it happened there. We are moving it forward. You see this area, it touches the exponential moving average. You hold on. It has touched the exponential moving average and it's moved down. Then you hold on to see, like, are we going to see this example again? It touches it again. Let's see, it moved down. Wow, this is a great sample. Then we start thinking of entering our trade when we see it occur again. You understand? So let's continue. You are waiting for the price to touch the moving average, then we enter for our sell trade. So it touched it here. You can see it touched it here. So you enter for your sell trade immediately. There is the next candle forms and it does not break outside the exponential moving average, and that's what happened. That's what happened here. You can see, and the market moved downward. Now let me explain to you again so you understand the strategy. There are 3 conditions you have to take note of. The first condition is anytime the candle closes below the exponential moving average, that's our first condition. Then we are getting ready for a sell trade. But before you can enter for the sell trade, wait for the second condition to exist again. Wait for the second condition to happen again. So the second condition states that the candlestick must touch the exponential moving average and must not break outside it, must touch it, then come down. Once this has happened, once this happens, then you wait for it to now exist. You wait for it to happen again, then you now enter for your trade. So you can also add, for you to say a trend exists, it has to move up to like 100 pips. So that's it. It's not that you now tell me this is a trend here now, right here. This is a trend. This is just okay, 98 pips, 100 pips. So this is just a single candle. So it must be multiples of candles before you can say wow, a trend is coming up, and it must be up to 100 pips. So let's look for another example again. Then we'll use our theory. Let's look at the right hand side of this chart here. Now the price has moved up above. The reason why I'm not using these examples, look at it here, is because the market has not moved up to 100 pips. This is 75 pips. You can check it here. This is 23 pips. So it must move up to 100 pips before we can say a trend is coming up. Now let's check this from here to here. This 74 pips, we all done. It's closed back down here. Then we just forget about this trade. Then we wait for this to close up again. Let's confirm here. Okay, good. This is a trend here. Let's see. Okay, 200 pips. Now our first law states that wait for the candlestick. This is an example for buy trade. Now wait for the candlestick to close above the exponential moving average, which it has occurred here. Now the first condition has been met. Now the second condition states that wait for the candlestick to retrace or pull back towards the exponential moving average without breaking the exponential moving average. Once price retraces back here and goes back up, then our second condition is being met. So we are looking for the second condition to be met. Now it was met here, but it was cancelled because price broke down here. So it's invalid. Let's look for another sell trade. This another trade here again. Let's confirm. Okay, this is 100 pips. So price closes below the moving average. So our second condition is wait for the price to touch the exponential moving average to pull back towards it. Once this second condition is being met, then we wait for the third condition to happen again. Then we enter for our trade. So let's confirm. It touches exponential moving average now. Let's see if it comes down. Oh no, it goes up. So we are not going for this trade. So let me look for an example. You have to be patient here. You don't need to rush. You have to be very, very patient. You don't need to rush. What makes sense in forex markets is patience. You need patience when it comes to forex trading. This happened the first time, but we are waiting for it to happen the second time, but we didn't see it, so we get out. Okay, let me look for more samples so you can see. Okay, I think okay, this is a very good sample here. Now look at this area. Price moved down. Is it up to 100 pips? No. What of towards here? Okay, it's just an example. We can't trade because this is not up to 100 pips. You can say you want to use 80 pips as your confirmation to confirm if a trend is already coming up. So now market, the candlestick comes below moving average. First condition is being met. Then price moved up here. It moved up there. It pulled back towards the EMA. second condition is being met. Then third condition, we are waiting for this scenario to happen again. It happened there and it came down, and you enter for your sell trade. So just wait for the candlestick to pull back towards the EMA, then wait for the next candlestick to close, then you enter for your sell trade. You set your stop loss at the wick. So just add maybe like 10 pips here, then you enter for your trade. You can target 1-to-1 ratio, 1-to-2 ratio, 1-to-3 ratio. So you can see it's moved back here. So let's check for another example again. I'm looking for, okay, let's move to another time frame. This AUD JPY, let's insert moving average, 40 candlestick. Oh, okay, I think this is a good example. The market broke out here. This 63 pips, this 80 pips, okay, 144 pips. So a trend is existing here. So now once markets broke out of this exponential moving average, you are getting ready for a buy trade. Wait for it to touch this EMA. Okay, we are fine, it's touched this EMA without breaking down. Then wait for it to happen again. It's touched it here again, then you enter for your buy trade. And you can see the market moved like 195 pips. Then you can target 1-to-1 ratio, or you can do trading stop. So that's it. So you can just, it is left for you now to say I want to add 100 pips as my condition to know if a trend is coming up. I want to add like 80 pips, 90 pips. It depends on you, but I like adding 100 pips. You understand? I like checking. Wow. I love this. Look at his sell trade price broke down here, which is perfect. Okay, there's 100 pips here. Okay, that's good. So let me show you this example. So our first condition is being met here. Price broke down here. Wait for it to touch this exponential. I'm very sure it will touch it. If we are in the current market, it would have touched it. Then you may be saying, Alex, but this thing touches very well. I'm very sure maybe this is just 1 pip remaining, so it might have touched it. Then price came down. Then we are waiting for this condition to happen again, this same condition. Then it happened there, price touched there. Wait for the next candle to form. Once the next candle forms, boom, you enter for your trade. This is 147 pips. You set your sell towards here, add like 10 pips. So very simple. So you can see from here before I enter for my trade is 168 pips. So I'm very confident like there is an existing trend. Let me show you the last example before we move on. Price broke down here. I'm waiting for it to retrace here, but it broke out, so I'm not going for this trade. It broke out here. I'm not entering for this trade. No retracement here. It came down here. Okay, it's moved up here. Perfect. Then okay, no any retracement here, no any pullback there. See, the reason why we can't enter for this kind of trade is, see, let's assume markets broke out here, broke out of this candlestick of this EMA. This is 17 pips, so we can't enter for this kind of trade. It's 17 pips. We need like, to me I need like 100 pips before I can say this is an existing trend. So it depends on you. This market came down below this EMA, it came down below this EMA, but there was not, we need an example of price to pull back, come down again, then exist again, then we enter for our trade. So all this we can't enter for them. I love this strategy. Let's see this example. Price came down here. Okay, price came down here, 44 pips. That's okay. It came down here. We are not checking our pips now. We'll check our pips when we are trying to enter our trade. It came down here, it's pulled back. It came down here, it's pulled back. But when it was pulling back, this is just 12 pips, so I'm not going to enter for this trade. So I can now enter. It's pulled back here, it came down, it's pulled back. I'm not going to enter this 42 pips. It's pulled back, it came down here. So let me see, let's assume I want to enter here. Is it up to 100 pips starting from where there was a signal that this is a sell trade? This for 54 pips. I'm not going to enter for this trade. Okay, I think I'm seeing an example here. Let me see, from this area to this area, This 43 pips, I'm not entering for this kind of trade. That's to me. You can say you want to enter for that kind of trade. Wow. Okay, I think okay. Market moved up here, 100 pips, came down, entered. I need an example again, but when it came down here, market broke out of this, so I'm not entering. I'm looking for another example, then we call it a day. I think I love this. Let me check from this area to this area. This 44 pips. Let me check here. Okay, it's broke out here. I'm not entering for this trade. I'm trying to give you another example, then we call it a day. Okay, let's check here. Price came down here from here, this 104 pips, but no pullback. So you can use this strategy on any currency pair, but I like using it on 1 hour time frames. This is an example here. Price came, our first condition is being met here. Price was below moving average. Okay, perfect. Then wait for it to pull back. Okay, perfect. It's pull back here. Then it didn't break it. Then you wait for your own condition to be met. It was met here, but market moved only 82 pips, so it came back here. And so I think you may say, Alex, I think I'll be using 80 pips as my confirmation for a trend. I think it's within 80 and 100 pips is cool. What do you think? Within 80 and 100 pips is cool. So see, I'm just showing you this strategy. You can say, Alex, I don't want to even use any pips to confirm my strategy. I just want to wait for the pullback I just want to use the 3 conditions straight. The first condition, wait for price for a sell trade, wait for price for candlestick to close below EMA. For the second condition, wait for pullback to exist. For the third condition, wait for the same pullback to exist again, then you enter for your trade once the second candle has formed after the pullback without breaking out the EMA, and boom, you enter for your sell trade without using maybe 100 pips as a confirmation for a trade or for a trend. You understand? So I think this is a powerful strategy, and you feel like you don't want to trade this manually, you want me to turn this into an automated trading system for you. I'm here for you to do that. So you can just contact me and I'm going to turn this into an automated trading system for you. Just attach it to your MetaTrader 4, insert it into your VPS, and boom, the EA or the robot will be trading for you automatically. Till next time.